Peter. Good to have you with us. Last week, it was all about the Fed. This week is again about central bank action or commentary more than action, I think. What are you going to be anticipating from some of those key meets?
Well, what a week it'll be. I mean, good morning to you both. Look, where we're sitting, you've got BOJ and, of course, the Fed coming out this week with some very interesting, I suppose, synopsis where we're heading forward. We've got retail sales dropped in August for the first time in 5 months. If you look at the snapshot of the services industry, it's fell to its lowest since about 2010. So they're not very good points. And if you look at the futures market, as far as what we're expecting, it's below 13% as far as an interest rate rise in September. And you're under 50% now for December. So I think it's going to be relatively weak leading up to Christmas.
Peter, good morning. Thanks for joining us in the morning today. Overall, Peter, even in the U.S. markets, while we had some comments coming through, those weren't the official comments of the Federal Reserve. And when the economic data that's come out after that looks pretty weak, is it possible that, it's not the Fed we need to focus on, but focus on Mr. Trump? Because it looks like he's heading towards running the United States. So maybe we should get 15-20% down on the US dollar.
Well, good morning, Ashu. Yes, it may well happen. I mean, we're a matter of only about, I think it's 6 to 7 weeks until election time. Very, very crucial period. And as we all know, he seems to be gaining momentum against Clinton. I think the camps are mixed in the sense of who's in front at the present time, but it's probably very close to 50-50. And what happens there is going to be breathtaking to watch. I mean, to be part of it, there have been no benefits. When you look at, wage growth over the last, say, 5 to 6 years in the States, there's been very minimal. And the only wage growth you've seen is higher minimum wages. And that's been by many of the states adopting a higher wage price. And that's for the likes of the McDonald's and the retailers like Walmart. But Main Street haven't had any uplift. With all the quantitative easing, there's been energised capital growth across real estate and across equity markets, but the greater majority of the Americans, I don't think, have seen sunshine.
Right. What about the Bank of Japan as well, Peter? Because at this point, it seems almost that what's happening in Japan has taken center stage, or perhaps that traders are more worried about the volatility that could sort of unfold out of Japan more than the Fed at this point of time.
Well, exactly right. I mean, it's an unknown. They've got to stimulate. They're looking at their headline inflation numbers. They've had a great run up. When you look at the Nikkei and what it's achieved over the last couple of years, it's been breathtaking as far as performance, and it's matched a lot of the large markets, like the DAX and certainly the Dow and so on. And I think that they're in some sort of quandary in themselves as far as manufacturing and, of course, demand of their product globally. So, in turn, we're waiting. We all know what Abenomics are about. They're all very conscious as far as his mantra of raising rates, getting rates up, but more importantly, getting inflation up. So that's where we're looking at the moment. And he seems to be having a one-set mind of really stimulating the economy and pedal to the metal and just trying to get results. But it's a very difficult achievement globally, and of course Japan falls into that situation more than most. So it's going to be a very troubling couple of months ahead, I think, for the BOJ.
Peter, I just wanted to bring up some comparisons which I saw over the weekend, and I'm just wondering about an adjustment in the U.S. market. There's a company that we're all happy to pay double the price to buy coffee from called Starbucks. And because of our expensive habits, Starbucks has a market capitalization of $78 billion. India's largest private company, Reliance, that seems to be in refineries, seems to be in oil, seems to be in telecom, everything said and done, is $47 billion. Alibaba.com is $226 billion, also US listed. I'm just wondering, these guys are basically sitting on tigers. And if Mr. Trump shakes the tiger a little bit, coffee may not be worth $78 billion.
Well, exactly right. I mean, when you look at that's exactly right, Ashu. When you look at current monetary policy, it's given companies far stronger incentives to invest in share buybacks, re-engineer their financial model, than to invest in their own operations and shedding headcount. And all of this has gone globally to try and capture dividends and, of course, maintain growth or grow. And if you look at numbers and you look at forecasted numbers and PE ratios and so on, you'd have to say, are we heading for a little bit of a cliff here? It's been a tremendous, 7-year bull market from the lows of March '09. And when you look at what Obama's been able to achieve as far as growth numbers, it's been phenomenal, in the sense of what the Dow is and the S&P. But over the next, 3 to 6 months, it could be very, very telling. And we may be at that point as far as having a correction, and a sizable one at that. So I think time's out, but $78 billion for a coffee company is it's a pretty big multiple.
All right. Peter, in terms of fund flow action, and I just want to get a sense and just want to get your take, on how India's looking currently, given that we've sort of been seeing pretty strong momentum at the moment. Do you see that shaking at all if we see jitters on the back of any of that central bank commentary? And even on the fixed income side, given, the kind of skewed picture we're seeing on the bond and yield front right now, any kind of implications of that you see and how India's starting to look with regards to that?
Well, first off, if you look at the distribution as far as policy stimulus, I think it's been, and many commentators are saying it's asymmetric, and it has not, in a lot of ways, given the overall market a true value. I mean, it's been very much, if you look at how it's been very much geared as far as the elites, Main Street haven't enjoyed the sense of QE, and then when you roll that across as far as bond yields, we all understand where the 2-year is at the moment. That's the barometer that everyone keeps an eye on as far as forecasts and so on. We look at that. Then we look at emerging markets. We look at fund inflows. We take our eye across to the likes of a Vietnam or Southeast Asia and of course India, and it seems to be in some ways one-way traffic. I mean, all those economies are doing rather well, far better than the West. If you take on board Europe and, of course, Japan and take on board the US, that's the new growth frontier. China's even picking up a little bit at the moment. So take it all on board, understand that it's going to be a very interesting couple of weeks ahead, and, of course, leading into the end of the year. If we don't see a rate rise, and I think that that's probably pretty much the case, where is funds and where will they inflow? Well, I think that they'll continue to emerging markets. And people look at alpha, and I think that's where you're going to see the majority of the growth over possibly the coming year. A lot of markets are totally grown.
Peter, I'm just wondering if we could see some massive destruction of value and investors then starting to look at markets where, you've got the demographics right, but the value is not that great. And I just wanted to take the example of this Alibaba.com again. 226 billion. Where Alibaba's main business is not even the one that's listed. It's something in the Cayman Islands that seems to have some license to the Alibaba business that seems to be listed in the US. I mean, to me, it looks like Alice in Wonderland, just because we don't understand Chinese and we don't know what's going on. A lot of these Chinese companies seem to be standing on stilts. And if they do collapse, I'm just wondering, wouldn't people like to buy in English-speaking countries where they can understand the financial statements? Maybe buy some Indian stock?
Well, you put your mind across to the likes of Jim Chanos that have been saying that you're going to see a massive correction as far as property pricing in China. So all of this is hinged as shadow banking. It just seems to be the way of that many of these companies operate. You look at the likes of, you're always used to listen to, Jim Rogers, and he'd say, can you believe the numbers? Do you believe the numbers? And it's difficult to believe the numbers. And this is an issue. I think the world's in some ways out of whack. And you're looking at the likes of an Alibaba, wonderful growth and what they've experienced, but, is it worth 226? And these licensing agreements, taxation agreements. Put your mind across to Apple. What's happening with Google? Where's Ireland and that situation that the EU was just mandated as far as claiming for tax to Ireland? This is all going to play, I think, over the next probably 6 to 12 months, and it'll play out. And I think many companies are going to, feel the weight of paying a realistic tax.